Welcome back to Seamless Extra as we continue to explore the latest trends and innovations in the world of digital commerce.
Hello, Agata. Thank you very much for joining me for a Seamless Extra interview today. Could you briefly introduce yourself to our audience?
Of course. So my name is Agata Wolska, and I've been working for financial services for, I think that's 16 years. So I was working in banks and fintechs and traditional banks with old legacy systems and more modern banks offering cutting-edge services and really which are open to technology. So I have experience working in both. Also, I am doing my PhD on Kozminski University in Poland. So I am writing my PhD. It's about open banking and digitalization of financial services. So how banks are cooperating with fintech companies, what about regulations like PSD2 that triggered this everything, that changed the collaboration between banks and the fintechs. It was the beginning. And then we can observe new regulations and new possibilities, which is also the Genius Act, which will even more enable the cooperation between those two. So working in banks and also working as a researcher. So I combine those two techniques.
Amazing. Thank you very much. So I have a few questions regarding the Genius Act today. So the US has passed the so-called Genius Act, creating its first federal rules for stablecoins. And my first question would be, why is the Genius Act a turning point for the stablecoin industry?
It seems to be very disruptive regulation. So it means that previously, how does the situation looks like? So we have our natural currency, fiat currency, and digital payments. Yes, so it's every payment that you can send with traditional currency, and we have also the currencies based on the blockchain. Yes. And stablecoin, so this is the currency which will be regulated via the Genius Act. So this is the cryptocurrency, because this is based on the blockchain. And the blockchain, it's even empowering the transfers, the settlement, reducing the fees. So it's solving a lot of problems that we have now with payments, traditional payments. And the Genius Act is going to regulate how the cryptocurrency are going to be adopted in the market. And the stable coins, these are the coins that the value equals like a traditional dollar, a US dollar, like USDT. So it means that they are not so volatile. Yes, so they are secure. So what we can take from stable coins is the security, it's the speed, it's the cost reduction. And it's going to, and of course, the collaboration between banks and the fintech companies, because this regulation is going to open the door for the new players, fintech players, which are going to give the technology to the traditional banks. And the banks, they do have robust knowledge about the regulations, etc., which the fintech companies, they just don't have it. So the cooperation might be quite extensive on this market.
Yeah, thank you. So this leads to my second question, actually. So the dynamic between traditional banks and fintechs. So how might this new regulation reshape the dynamic between traditional banks and fintechs?
Yes. So we are observing the play on the banking market. Yes. And it started after 2018, so some time ago, when the PSD2 regulation was implemented, and PSD2 was about open banking. And open banking says strictly that not only banks can offer financial services, but also another company, even without the banking license. Yes, and it opens the door. Because as you can imagine that we have like a traditional banks with the old legacy systems, they are sometimes big and they're not so agile. They are not so they do not answer enough quickly to the market demands. and market expectations. Yes, and after like approving this regulation, new fintechs like neobanks proliferated on the market, offering really good technology that traditional banks they could not produce because of the lack of knowledge. Yes, and because of that, the banks are quite not slow, I might say. Yeah, they are quite slow in the response. So we are seeing the play between banks and fintechs. On some markets it's bigger, on some markets it's not so good. Everything depends on the adoption, on the cultural basis, on the adoption of technology, and the customer demands, of course. But we have some companies that are pioneering on the market and showing us some kind of the pattern. Yes, and showing and like teaching the end customers, showing that listen, we are offering you this service, and this service, and customers just expecting this kind of the service, speed, transparent services. Yes, and if you even go back some years back, and you might maybe remember that some banks, traditional banks, there were even many times punished by the European Commission because the banks mislead customers without, for example, selling some loans, credit cards, without even really good explainings about the fees. Yes, so many times banks needed to pay the fee, the penalties, because of misleading. Yes, so this is bad marketing, I might say. Yes, so customers currently are showing completely different patterns. Yes. And answering the question how the Genius Act might change the interplay between banks and fintechs is this, that we're observing whenever a new regulation is adopted on the market, it opens many doors, because the regulations, it gives limitations to banks, because banks only can offer financial services based on some particular regulations, and they just cannot skip it. Yes. And also, if regulation says that, listen, this is possible, so it opens the door for a completely new services that are going to proliferate on the market and fill the gaps. Mm-hmm. So currently, within this regulation, which is saying that, okay, currently you can use the stablecoin technology in order to improve your payments. Yes. So having this in mind, the customer might choose, listen, or either I can pay the same amount for transfers. Imagine that you're going to send a transfer from one geography to another geography, and the sender completely, they still do not know what would be the cost, because of many banks, intermediate banks, they take part in the whole process. There are a lot of actors, and each of the actors takes its fee. And at the end of the day, you don't know how much you're going to pay. Yes. And the receiver is receiving the transfer, but this is decreased. Yes, so this is lack of transparency, and of course there are a lot of companies still offering like cryptocurrency payments, and it's working, but it's not so still secure, because there are some gaps, and the Genius Act is going to regulate everything. So those payments are going to be adopted, yes, in order to improve the whole customer experience, the speed of the transaction, lower the cost of the transaction, make the transaction more transparent, so that you know everything about the cost, who is going to take part, and sometimes eliminate some players. It can mean that some players are not going to profit from these transactions. Yes. Mm-hmm. So if the player is not going to profit from these transactions, so they need to start offering another service, which will be, of course, based on the stable coins, in order to not to lose the market. Yes. Mm-hmm. Yeah. So it opens many doors for many companies. So the most important for the end customer will be the security, the compliance. Yes. In order to receive really fast, transparent payments.
Mm-hmm. So you basically already answered my last question, but I'm gonna ask it anyway, so we have a better understanding. So how do you see this new regulation, this new Genius Act, changing the way digital money moves across the payments landscape in the long run, or stable coins in general? How are they gonna change how money moves?
also, what I did not say is this, that it will even enable the whole cryptocurrency adoption and blockchain transactions. So because you can, as you can remember, they do not have a very good reputation, the cryptocurrency payments, because of the risk. Yes. And of course, because of the lack of the knowledge of many people, some people still think that Bitcoin and blockchain is the same thing, but it's completely different. Bitcoin is the currency and the blockchain, the technology, and Bitcoin is based on the blockchain, yes, the technology. And you can adopt blockchain into the payments, offering really good landscape, even programmable payments. So it means that you can just program the payments using smart contracts, and it can be completely automated. Yes, and imagine that I am sending you a transfer in some completely different currency, and you're receiving this in the seconds. Yes, and there are no intermediate banks and there are no additional fees because everything remains in the ecosystem. And also in the long term, because of the United States adopted this regulation as first, yes, so it means that perhaps the dollar will rise, the dollar will gain against other currencies, so will strengthen. So it will be good for the US economy. And also in traditional payments, fiat payments, we have a lot of regulations, yes, which are imposed by the European Commission, like 3DS secure. So it means these are all requirements in order to increase the security. So if you can imagine, the blockchain is a very, very, very secure method. Yes, even you can use it in the IT verification in order to strengthen your technology against generative AI. Generative AI, it's everything which can say that you're going to onboard some fake accounts, yes, and you don't want to onboard fake accounts. So this regulation is going to promote all blockchain transactions that should have been adopted some time ago into payments, but still wasn't because of the barriers. There were some barriers, and imagine that every bank needs to decide by themselves if they're going to adopt blockchain, because this is quite a huge investment. And as I have told you, that like leading banks, usually there are very, very big banks, and sometimes they are not so knowledgeable about the technology. And very often the reason why they do not like build something in-house, it's because of the lack of knowledge. And that's why this problems opens another door. Yes. So the banks, they can decide, okay, let's build something. Okay, so let's invest in-house. So how much it will cost? How much time it will take? 2 years, for example, to build something. But you have another solution. You can take this solution from your fintech partner, which has already ready solutions. So it means that you can just pay for the solution, even on the subscription manner, yes, and have the results immediately. Yes, so you would not even need to wait 2 years until you receive your first money, yes, from the investment. So this is the best, generally, yes, to cooperate with like a specialized fintech companies which specialized in blockchain payments, and this is currently good opportunity for every company which would like to enhance payments, yes, because what customers want something which is speed, which is not expensive, which they understand, which is safe, yes. So those everything offers the technology, yes, the blockchain technology, and the stablecoins, they are based on blockchain, so it's less volatile. And even if it will be secured by the regulations, so it will be even better for everyone.
Amazing. Yeah, thank you very much, Agata, for sharing your insights. I'm looking forward to learning more in November at Seamless Saudi Arabia. Really looking forward to meeting you again.
Yes. I cannot wait to see you again in November. Yes, it is.
Yes,
November.
thank you
Nice.
very much.